see if I can get this. Okay. All right. So, good day, good day, good day, guys. Today is Sunday. I think it's 22nd, 22nd of February. All right. So, if you're watching this video, you're basically a member of the BmoreFx Summit. So let me say shout out and welcome. Welcome to one and all. So this video I'm basically gonna break down the this new approach that I've been taking to the market for the past 2 weeks. And I've been getting 60% win rate on it. Right? So if I take 10 trades, simply means I win 6 out of 10. So I'm gonna break it down for the persons who are in my group, persons who I'm currently trading with. Okay, so again, if you get this video or you have access to this video, simply means that you're a member of the team. Okay, so let's get into it, guys. All right, so let me get to the screen. Okay, all right, so let me delete everything off the screen so you guys can start from scratch. All right, then okay. All right, so what you're seeing right here now is the weekly time frame, guys, and that is where we start from. So we're basically doing a top-down analysis for this week, right? And it's simple. It's called top-down analysis because we're starting from the top and work our way all the way down, right? Now, this approach can be easily explained, right? So you can have different approach. Like I think it was like 3 or 4 weeks ago I started using, basically 3 weeks I've been taking this approach. And one of my students said to me, why not take it to like a lower time frame so we can basically get in the trade and get out quicker. So maybe in Europe, not already very flexible, and I believe even though you are teaching someone something, does not mean you cannot take the advice, right? So I took her advice and I did it, and lo and behold, I saw where it definitely makes sense, right? So let me just do a quick analogy as to how this system definitely works, right? So think of it this way. So if you have this ball, right, sitting right here, and then you got a next ball sitting right here, right? And you are gonna pour what you have in this bowl, right? To then fill this one, which is empty, right? So this is you pouring from here into this bowl, right? This is what's gonna happen. Based on the distance that this bowl sits from the bowl that's pouring the liquid or whatever you're pouring from it, it's gonna have a splitting effect, right? That's basically because the higher this is from the receiving end, it creates more force from whatever you're pouring from this, whether it be dirt, sun, water, anything. So it's gonna hit in this and then bounce right out, right? Because of the force or pressure, whatever you want to use, it's gonna cause some reaction, right? And it's gonna be a reaction causing whatever you pour to bounce from it. Saying that to say that the approach that I was taking was basically like this, right? I was looking at the higher time frame and I was trying to catch the same moves that I'm catching on lower time frame and the higher time frame. And this is what was happening. It was all over the place. It was like you're not getting anything. The bowl would never get filled. And after this one is empty, which is 100% full, at the end of the day, you probably get like 20% of what was in this, right? With a lot of space still leave. So you won't get the full capacity that this one had when you pour into this one. And like I said, reason being the distance between the cups are just too far. that was the approach I was taking, right? So then I say, you know what, after taking in consideration what this, what my student said to me, okay, one, so this is the next analogy now, and this is the approach that I took, which is to get closer whilst dispensing or pouring into said cup. See? And this is what happened. Go straight into it without a spill and fill it right up. Makes sense, right? So that's their approach, guys. It's just very simple as that. So from here, this was the higher time frame approach. You catch little to none, or whatever you catch just doesn't make no sense. But we took it down, and this is what happened. We get probably 90%, or if not 95% of the quantity that was in this cup, or the amount that was in this cup, right? So that's what I'm gonna explain right now. Okay. Now, let me take this off. I don't want this video to be long, so I'm gonna make it as very snappy and quick, but very explanatory. All right. Now, this is the weekly time frame, right? So we're not looking at this candle. We're looking at the red candle. So this is the week that just passed. This is the week before, right? So this is the approach. So what we did last week, we highlight this, right? So this is basically the approach that we're taking, guys. And I want you guys to watch carefully. I'll speak a little fast, so I'm going to slow down, all right? So candle opens right here, close at the bottom. We know that bearish candles open at the top, close below. Vice versa. Bullish candle open low, close high, right? So this is the entire move for the week before this week, which is the week that just passed, right? Now, when you highlight this, it simply means that you are basically looking at where price opened last week and where price also closed, right? Now, that is a very, very strong price line, right? So right here, which is 157.57, and right here, which is 152.713. Very strong. So make it easy. Between here and here is where we're interested. That's the only place we're interested. We're not interested in here, here, the top here, here. No. We are interested only in this green box, right? Now, apart from that, yes, we also need to know the current trend of the market, right? I can clearly see that this weekly time frame is bullish because we got a low right here and we got a high right here. So even though price pushes down, it is still bullish because we never broke back below this low, right? So as long as price stay from here and here, this market is a bullish market, right? Now, we just want to confirm that weekly is bullish, which is good. The thing with the trading is that once you're trading with whatever the weekly is representing, or if the weekly is trending bullish, it is good for you to trade and look for buys, right? So even though the 4-1 might be bearish, you can still wait. Trading is just patience, guys, right? It's patience. I've always think about this system, but I also wasn't patient enough to literally wait on it to happen, okay? So I'm doing from here now, we go to the 4-hour time frame. Now, the reason why I go to the 4-hour time frame is that the fact that you're approaching the 1 minute time frame, whatever the 4-minute time frame signals, it simply means that the 1 minute time frame is going to automatically get in line with said system, right? Now, the week starts right here. You can clearly see that, right? This was Sunday, 8th, yep. And then it closes right here. That was Friday, right? So this is basically the week that we took trading last week, Thursday, Friday, right? So the market opened right here. Okay, so the market opened right at this candle. Everybody seeing that? Perfect. Now, we can take this in just for, to make it make more sense, right? Even though this is the week that we highlight to get this week price action, right? So, guys can see where the market open right here, right? Now, we do not take trades on Monday, and neither do we enter a trade on Sunday night, right? So that's the thing. Do not take trade on Mondays, and we do not enter a trade on a Sunday, even when the market is open. No matter how crazy the candle might look, even if it broke through the roof or through the tip of your screen, do not enter a trade on Sunday night or Monday. Let those 2 days play out first. And I'm going to prove to you why that makes sense. Now, if you were to look at the chart right here, this is Sunday. And look at this. Right through the day, Monday, price came back and retest exactly where the market opens on Sunday. This is where the opportunity comes in the market, guys, right here, right? Now, I've just realized something again, because with trading, it takes a lot, right? For you to say, okay, then this makes sense. Now, 9 p.m. Monday evening is when you can literally get your entry. This is 9 p.m. Monday evening, right? So we're going to change the color of this candle. So when you go to the lower time frame, we can make reference to it. That's the red, right? Now, like I said, you're only interested in this green box right here. Okay, perfect. Now, apart from that, what we also need in our chart is the 3 round psychological levels. And that's where we're going to use to say, okay, then this is where price is coming from. This is where price is going. This is your GPS for the direction of the market, right? Without this, you're going to get lost and you're going to lose trade. Okay, so we can safely say right here, 53. This is 53,000, and we're going to simply add that to our screen, right? So this is point A, right? And you can simply see where price hits our previous week level. So the end of this box right here is our previous week level. So this is also one of our confluences. We need to also identify that this right here is a very strong area. If you notice, price open there, and price rejects it very perfect. However, you still need to identify your own psychological levels, right? So now we got 153, right? Now we need 154. Take this up to 154. Now we need 155. Very easy, guys. This system just needs patience, that's all. Okay. Now, here we go. I always say this to my students, guys, price only move within 3 ranges for the week. You're not going to get price at 4 on psychological level. If you get that, simply means that that market was very volatile, or the news prompt that market or pushes that market to take out 4 round psychological levels. But in most cases, the market only takes out 3. All of this move was from Sunday, right here, all the way to Friday. And see, 1, 2, 3, 1 psychological levels taken out, right? Now, once we identify 9 p.m., now we're going to go down to the 1 minute time frame. And it simply means that we can clearly see where this market breaks out, come back and retest, right? Now, when a market pushes up and come back to where it leave from, to then retest said level, that's a good confirmation that price is going to head to the upside. And this is why we do not enter trades on Mondays, because we simply see that the market just was not ready. It was in a primary stage or a pre-stage to continue bullish, right? And probably that you're right, but the market is trending to the downside. Yes, it's trending to the downside. However, we are in an area of rejection. See that? Good. Now, from here, you go to the 1 minute time frame. Now, this is where it gets interesting, right? go to 1 minute time frame, and we are looking for 9 p.m. because this is when we enter our trade, Monday evening, right? So if you look at 9 p.m., this is what we're looking at on the 4 hour time frame. You can see where price is above our rolling psychological level, which is a good indication. And not only that, we were rejecting said one psychological level right here. You can see where, and this is where you have to wait, guys. You have to have patience. A lot of people that buy right here, but no, we need price to retest this where price already broke from on the 4 hour time frame. Right? Now you could have entered here, but this is what would happen. If you had entered here, your risk would have been just too much because you would have to go out of this zone right here in order to risk. See that? And this is what 75 pips. And if you were to go close here, which would be extremely risky, you would risking 33 pips. This is where your risk factor comes in. It is where you enter makes your risk factor make sense, or your risk tolerance make sense. So it's patience again. Now, you can clearly see where the market breaks here, we test it, and then it breaks again, goes back up, come back down. Now again, like I said, most persons would have buy right here, but the risk would have been greater than the person who waited patiently for price to get back at this level, which is where price takes off Sunday when the market open, right? So this will be our retest. Now, we don't have to enter here. We can wait for price to then re-break said one psychological level. See right here. Wait on price to break back this one psychological level. This is what I would have done. I would wait on price to break back this one psychological level. And it took place right here. See that? Break it back. We see back some rejection. We could enter on this candle. See this candle right here? This is where I would have taken my trade. Right? And the reason why I would also take that, this is the thing, guys. You want the market to sweep the available liquidity of these persons who enter the market too early. These persons, you got persons enter the trade right here, not realizing that the system that we use have a low right here that is very important. All right. What the market just did right here is swept the available liquidity which sits underneath these entries. Because look at it, you would have persons who enter right here saying that the market give them 1, 2, 3 tops, 4, and it's good to go right here. And then they would have put the stop loss right here, saying that they're going to risk 10, 15 pips, 20 pips. Unless they're risking 20 pips, that is when they would have been safe. But most persons are going to say, okay, I'm going to make my stop loss tight. I don't want to risk too much. And that's what I'm doing right here. So that's what the market did. The market came, swept all this stop loss right here. And if you look to your extreme left, you can clearly see where there was also more available liquidity. See that? Persons would have entered here, person would have entered here also. Or even here, person would have entered here also. These persons would have gotten stamped out if they were holding on to these trades. But the persons who are smart would have got out here. Okay? So that is why we wait for price to sweep the available liquidity. And this is where most people will say smart money concept steps in, where the smart traders comes in after getting this liquidity sweep. Okay, so would have entered right here, or for safety would have entered right here. Okay, now why I would take this trade right here is because price retest right here. Okay, so see, price retest right here, and this will make sense to enter this trade. Now, if you enter this trade right here, you would use 20 pips for your stop loss. You always want to risk 20 pips. Depending on your account size or your risk factor, 20 pips you get stamped out. So say for instance, price came and take us out right here. Right? Break this and then come back and then break this and head back up. You would have lost a portion of your account, but your account won't get blown. And then you would go back for the entry right here. Risking 20 pips again, right there. Now, the reason why you're safe with 20 pips right here is because the market already swept the available liquidity that was sitting underneath here. retested here to then take back off. You can see clearly where buyers came back in strong, and this is where we'll have to take our entry on this pullback, risking 20 pips. Now, more so will be here, why you didn't put the stop loss all the way down here? The reason why I risk 20 pips is because if the market was to break past here and also come and clear this level, you'd have lost way more. Keep your losses small and your wins bigger. So you're risking 20 pips right here. So if you get stamped out, you lost 20 pips and you can re-enter the market because your account will have still have that leverage or have that the means of getting back in the market, right? But if you had risk right here, that would have been like 40 some pips. Market came and take you, that's probably a large portion of your account. Okay. Now, when you risk 20 pips, the most you can do is go for a reward of 40.5 pips or 40, which is a 2-to-1. Now, the reason why I wouldn't go for a 2-to-1 is because there are a very strong possibility that the market gonna hit this one psychological level. So I would have put my first take profit right here. And that is a 1-to-4. Say 1-to-4.5 basically, right? And if you notice, price did came back a little pullback, but we don't care about that, right? This is where we get out of the market if we are wrong. Okay? So some person might be like, so why didn't take profit here? No, your target should be the next round psychological level. If the market come back and take you out, simply means that you were wrong, the market is never wrong, and then you re-entered for the position. Now, the fact that US 30 is recovering from last week pullback, a lot of persons would go for this one psychological level, which would be a 1-to-9. Okay? Now, it's not being greedy if you want to go for this one psychological level. It is simply because the market is showing you that, hey, I have a strong volume, or it's a very strong possibility that I can get this out. And remember, I told you, the market always goes for 3 round psychological level, which is that 3. So you would have entered this trade like 9 p.m. See, you have entered right here. Oh, this is 9 p.m. Oh, yeah, 9 p.m. Monday. Market pushes back, retest. So we have entered this trade New York session Tuesday morning, and you would have hit TP by Wednesday 9 p.m. if you go for the full ranges of one psychological level. Now, if you had went for the first range of one psychological level, you would have hit TP Wednesday 9 a.m. in the morning. Now, this is what I was saying, guys. Normally, when I enter a trade on the higher time frame, using the first system with the cup being all the way high, trying to pour water in it, it just takes too long, and most people get frustrated saying, oh, I wish I hit TP already. So to eliminate all of that stress waiting for TP, that is why we took it down to the lower time frame where it seems to make more sense and you get a tighter entry and a more accurate entry, basically. So that's the system, guys. That is exactly how it works. You can always watch this video again or replay it. If you have any question, you can definitely reach out to me, and I will go over whatever you want me to go over again. But that is basically it. Hope this video is not too long. And if you're not a member of this channel and you want to be a member, just simply subscribe and like this video. And if you want to be a member of the team, you can also send me a message, whether through YouTube, through the comment section, or you can hit me up at IG BmoreFx Trader, or you can join our Discord also BmoreFx Trader. Alright, so that's the video, guys. Peace out. Thank you very much and enjoy the rest of your day. Ciao.